So if you're looking to get started with dividend investing, one of the very best places to start is the list of Dividend Aristocrats. This is a list of companies that have grown and paid dividends consecutively every single year for 25 years or more. So in this video today, we're going to be providing a very quick summary of every single dividend stock over on this coveted list of Dividend Aristocrats. Now, real quick here, guys, before we get into the list, I just have to mention here that I am not a financial advisor. This is not any sort of financial advice, and you should always do your own research and due diligence on stocks before investing. Also, guys, if you are interested in reading along while we go through the video, I also have a written guide on this topic over on my website, ryanoscribner.com. That's also going to be the very top link down in the description below. This is a tremendously valuable resource that one of my researchers put together. So thank you very much, Drew, for putting this together, and also the research for this outline. So I would really appreciate it if you guys check that out and see what Drew put together here with all of his hard work. We're talking about over a 10,000 word guide there with a table of contents sort of showing you all you would need to know about these Dividend Aristocrats. So there's a lot to cover here in this video. We're going to be moving as quickly as possible. So you might want to pause as we go along here if you see a stock you're interested in. That way you can read the different information on the screen. I'm just going to be providing a quick overview and jumping through these as fast as possible. Also, guys, there is a table of contents down below in this video if you want to skip ahead or skip backwards at any point in time. But that being said, we're in alphabetical order here, starting off with number one, which is AbbVie. AbbVie is a pharmaceutical company which spun off from Abbott Labs in 2013. Now, because of that, AbbVie uses Abbott Labs stock history because they were the same company and thus a dividend aristocrat. And as far as the dividend goes, they have had 50 running years of consistent dividend growth. Next up, we have Abbott Laboratories. Now, ABT has made healthcare and medical equipment since the year 1929. Their products are diversified across the medical sector, giving them very stable revenue. And as far as their dividend goes, it is, in addition to the first one we mentioned, 50 years of consistent dividend growth. It's also important to keep in mind here that as we are seeing people live longer and longer, the need for healthcare is only going to increase over time. Next up, we have a well-known insurance company here called Aflac. Aflac is a supplemental insurance provider. Now, the pandemic may have hurt sales for them, particularly maybe in the automotive segment, but they have bounced back utilizing online sales. As far as the dividend goes, they're on 39 consecutive running years of dividend increases. Next up, we have a company most people would have never heard of before. That is Archer Daniels Midland. Archer Daniels Midland processes and transports many food products across the United States and abroad. They're also well positioned against their competition as their international reach has cemented their stake in the market. As far as their dividend goes, they have 48 running years of dividend growth. If you've ever gotten a paycheck, you've probably seen this logo on it. ADP, Automatic Data Processing. This is a company that provides business management systems, including payroll, HR, and employee benefits. And this company has a 47-year track record of increasing dividends every single year. In addition, their B2B or business-to-business model does provide for relative stability. Next up is a company we're going to refer to as ALB because I cannot pronounce it. ALB is a chemical company that provides chemicals and catalyst products powering batteries across the globe. As far as their dividend here, they have 28 years of consecutive growth, making them a newer addition to this list here of dividend aristocrats. Next up, we have a company called Amcor. This is a globally renowned packaging company from Switzerland. So if you like to spend a lot of money on online shopping or different things like that, this may be one that you want to look into. As far as the dividend goes, they have 39 running years of consecutive dividend growth. After that, we have A.O. Smith. AOS has provided water heating and treatment solutions around the world since the year 1874. So it's a pretty boring but consistent investment here, and if you like having hot water, you might be interested in this company. As far as the dividend, they have 30 years of consecutive growth over the last few years. Next up on the list here, guys, we have Air Products and Chemicals Incorporated, trading under the symbol APD. So APD makes atmospheric gases for cars, food service, medical tech, construction, aerospace technology, and other industries. I've honestly have noticed this definitely at the dentist or different medical offices. I have seen that logo. So this is the company benefiting from all of those gases. Now, this is another B2B company offering relative stability in the healthcare sector. So you got a couple of advantages there. And they do have an impressive 40-year streak of growing that dividend every single year. Next up is Atmos Energy. ATO is an American distributor of natural gas serving Texas as well as states in Southern America. Atmos recently committed to cutting their methane emissions down by 50% by the year 2035, so they are at least aware and adapting towards green energy practices. As far as that dividend goes, it is 38 years here of consistent growing dividend payouts. After that, we have Becton Dickinson Company trading under the symbol BDX. BDX is a global supplier of medical supplies and diagnostics equipment to hospitals as well as other healthcare providers. You're going to notice there's a lot of healthcare stocks on that list, and that's for good reason. These tend to be very boring yet consistent industries with consistent spending, which can lead them to have very consistent year-over-year dividend increases. Beyond that, guys, they have 50 years of growing that dividend every single year. So they are one of the very top here of the list here in terms of the longest running dividend increases. Next up, if you're familiar with mutual funds or that industry whatsoever, you've definitely heard of Franklin Templeton. Well, the parent company here, Franklin Resources, trading under the symbol BEN, is another dividend aristocrat. So this is basically an investment management service. If you like that business as a whole, you may want to check this out. And they have 41 years of consistent dividend growth. After that, we have a company called Brown-Forman, trading under the symbol BF-B. Brown-Forman is an alcohol producer who owns brands such as Jack Daniel's, Woodford Reserve, and more. I don't know about you guys, but my attention was piqued when I heard Woodford Reserve. I live near the Saratoga racetrack in New York. I spend a lot of time up here in the summer when I'm not in Florida, but that is the official bourbon of the track there is Woodford Reserve. So definitely would recommend that product, and maybe, take a look at the stock if you really like that bourbon. As far as the years of dividend growth, they're sitting at 38 consecutive years. After that, we have yet another healthcare company, Cardinal Health. CAH is a manufacturer and distributor for medical products and services to healthcare facilities with 35 years of consistent dividend growth. So here's a company that most of us enjoyed as kids. That is Caterpillar. We loved watching those big yellow trucks working when we were driving around with our parents. Well, Caterpillar is a dominant company in the construction and manufacturing industries, supplying vehicles and machines that many businesses utilize. However, as a result, revenue is reliant on the current state of the construction sector, where there are boom and bust cycles. Despite that, Caterpillar has still been able to grow that dividend every single year for 28 years, making them a newcomer but a dividend aristocrat nonetheless. Next up, we have Chubb Limited. This is a global property and casualty insurance provider based in Switzerland. Again, another boring and consistent investment in the insurance sector. As far as their dividend goes, they have 29 consecutive years of dividend growth. Sticking to the theme here of insurance, next up we have Cincinnati Financial. This is another insurance company which mostly provides casualty insurance to businesses. However, because of that, the stock has seen rapid growth after the pandemic, with so many people starting their own side gigs or businesses. As far as the dividend, they are one of the very top of this list in terms of consecutive years of dividend growth, coming in at an astounding 61. After that is another company that most of us have heard of. That is Colgate-Palmolive. This is a very old company as well here, dating back to the late 1800s. So we all know them as a dominant leader in hygiene products, and they're also a solid dividend company here with 58 consecutive years of dividend payouts, and increasing those every single year. After that, here is a pandemic play that people really loved, and that was Clorox, trading under the symbol CLX, and they make more than just the bleach that we've all come to know. So they have 53 years of consistent dividend payouts, increasing them every single year. They're the biggest brand in bleach as well as other household cleaning products. And again, just another very consistent company with consistent growing dividends over the last 50 plus years. After that, we have Cintas, which is a company that provides safety and sanitation products to businesses, helping these businesses stay up to code. This company here has enjoyed 39 consecutive years of dividend growth. After that, we have our first oil and gas company on the list, which is none other than Chevron. Chevron is an energy company who produces oil, gas, and other petroleum products, and they have had 39 running years of dividend growth. After that, we have one of the longest running dividend growth streaks on this list here from a company known as Dover. This is a manufacturing company who makes gas pumps, car equipment, waste management, and other fridge-related equipment, as well as much, much more. Now, their business has been increasing through 2022 with many new government contracts and improvements to overall production. And as we mentioned earlier, that 66-year dividend growth streak is impressive to say the least. After that, we have a company known as Ecolab, which is a leading water, hygiene, and infection prevention company with a 30-year dividend growth streak. Next up, we have a company from the industry that I used to work in when I had a 9-to-5, which is the power utility industry. I didn't work for this company, but I worked for another one. But this one here is called Consolidated Edison, trading under the symbol ED. So ED is a utility service company that supplies electricity, gas, and steam, mostly to New York City and surrounding communities. And because of the consistency of that business, they have been able to enjoy 47 continuous years of dividend growth. Next up is a company that I used to own. I purchased them after the pandemic and did exceptionally well. After this stock had quite the run-up, I did end up selling it in 2021 during the summertime. But that is none other than Emerson Electric, which is a company that provides new technology innovations to the industrial sector as well as business software. So this is another king on this list here with 65 years of consecutive dividend growth. After that, we have a lesser-known company here called Essex Property Trust, which is a REIT, or Real Estate Investment Trust. This is going to be where you are owning a publicly traded company that actually owns a portfolio of real estate, and then all of the money generated from that real estate is paid out in dividends, and they're required to pay out at least 90% of profits to shareholders in order to be classified as a REIT. Now, real estate does have boom and bust cycles, but nonetheless, they have been able to maintain 28 consecutive years of dividend growth. Now, one thing to keep in mind here is that they primarily manage properties on the West Coast, and you do know that real estate is very specific to certain areas. So, me personally, I'm not very bullish on West Coast real estate, but I also just don't know much about that area, being from the East Coast. So, that is one important consideration to keep in mind when looking at this stock as well as other REITs out there. So next we have a company called Expediter International of Washington, Inc., or they also just go by Expeditors. Expeditors is a global freight and shipping company with 357 locations. Now, there is a lot going on with supply chain bottlenecks right now in 2022. However, they seem to have had a consistent business year with 28 years of dividend growth. I would recommend doing more research into those supply chain bottlenecks, but this could be an interesting one to keep on your watch list for Dividend Aristocrats. Next up, we have another REIT. However, this one is not focused on West Coast real estate. They're focused on shopping centers and business properties. Now, for me, that will give me an immediate red flag. I'm not going to touch a company involved in shopping centers because of the, downfall of commercial real estate that we've seen over the last few decades. Now, not everyone agrees with that, and so if you want to look more into this company, you certainly can. They have 54 years of consistent dividend growth. However, looking at that payout ratio, that may not be sustainable for here in the future. So you do have to keep that in mind, as well as other important factors when looking at a dividend stock. And what I mean by that payout ratio is when the payout ratio is above 100%, that means this company is currently paying out more in dividends than they are earning, which is not sustainable for the long run because you're going to just simply run out of money. It's going to be a challenge for them to continue growing that dividend when they're currently paying out more than they're earning in dividends. After that, we have a company called General Dynamics, which manufactures military vehicles as well as business jets. This company here has had 31 consecutive years of dividend growth. After that, we have another stock that I used to own in my portfolio, which is Genuine Parts Company, the parent company of Napa Auto Parts, as well as other branches in the automotive and industrial sectors. This is one of my favorite companies, guys. I'm sure I will own this stock again in the future, and they have an impressive 66 consecutive years of dividend growth. Now, this tends to be a solid pick during a recession or bad economic time, and that's based on the fact that people are going to spend more money repairing their existing vehicles versus going out and buying a new one. So that is why I also like this stock during times of uncertainty. Next up, we have W.W. Grainger. This is a B2B manufacturing company who delivers large orders to big clients with speed and accuracy. So it's safe to assume this is a logistics-related company. They have a deep sense of trust with their customer base, which creates solid revenue for them that is consistent, which has allowed them to have an impressive 51 years of consistent growing dividends. If you go to the grocery store and you buy things like Spam or Skippy peanut butter or possibly Hormel's chili, well, you might want to also have this stock in your portfolio. This is a food company that makes popular products under a number of different brands. They also have 56 consecutive years here of dividend payouts. I think this is, and not to mention, in addition, they have grown those payouts as well, making them the Dividend Aristocrat. With Hormel Foods here, it could be interesting because inflation is pushing food prices higher and higher, so they can pretty easily pass those costs over to the customer at the end of the day. So this may be one to keep on your list with rising food prices. Next up is another stock I used to own in my portfolio, and it was never really a big moneymaker for me. This is a stock that has been stuck in a lateral movement for a number of years, if not decades. That is IBM, or International Business Machines Corp. So IBM has actually gone from a computer giant, which was their legacy hardware business, to a business management software giant and a leader in cloud computing technology. Trust me, it always sounds very interesting and appetizing, IBM, but for some reason it has just never translated to that share price really going anywhere. You always wonder, is this the year for IBM? And I've been an investor, or I was in the past, I should say, and it just never was the case. They do have a consistent dividend payout and 27 years here of consistent dividend growth, but I would say, be weary here of IBM just based on my own personal experience with this stock. After that, we have a company called Illinois Tool Works. ITW is an industrial manufacturer who provides equipment across 7 different market segments. This is what we call a big, boring company diversified across multiple different sectors. Based on that, they have had 51 consecutive years of dividend growth. Next up is the healthcare giant Johnson & Johnson, another stock that I have owned in the past and will again in the future. J&J produces health beauty and medical products, as well as the major COVID vaccinations, along with a number of different healthcare providers. They have had 60 years here of consistent dividend growth, putting them at one of the top spots here on our list. After that, we have Kimberly Clark, which makes personal care products such as Huggies, as well as paper products such as Kleenex. Again, very consistent spending here on paper products and other consumer personal care products. This has allowed them to have 50 consistent years of payouts and dividend growth every single year. Then we have none other than one of Warren Buffett's favorite investments, Coca-Cola, trading under the symbol KO. This is the most dominant company in the soft drink industry and the beverage industry as a whole, because as people's tastes have changed and people have gotten away from sweeter drinks, they have bought up a massive portfolio of sugar-free beverages, seltzer companies, etc. A stock I have owned in the past and will again in the future, with 60 years of dividend growth. Next up here, guys, if you have ever sat on a couch or a bed or anything like that, you may have sat down on one of this company's products. That is Leggett Platt, a leading furniture company. This is a manufacturing company who provides seating, cushioning, and mattresses, and this has allowed them to have 51 consecutive years here of dividend payouts. Now, this stock did take a big hit during the pandemic, as many companies did, but they have bounced back since then. And with all of these shortages here on furniture, I would imagine this company could do quite well with a backlog, assuming that they can get materials and get stuff out the door. After that, we have Linde PLC, trading under the symbol LIN. Linde is a chemical engineering company who makes gases used in manufacturing many modern products, again making this another B2B company. So that type of business makes for boring but consistent spending here, and this has allowed them to have 30 consistent years of dividend growth. Next up is the pandemic play that I did the best on, and that was none other than Lowe's. I've got to say, I wish I could say that I had some type of foresight into everybody going out and buying real estate and fixing up their homes. I really didn't. I just liked the company, I liked the stock, and I bought it in March of 2020. I ended up selling Lowe's about 2 years later for over a 100% gain, which is insane to think that you could double your money in that short period of time on a boring stock like a Dividend Aristocrat. But I'm here to tell you it's possible because I've done it myself before. Lowe's is a leading home improvement retailer, and they have an astounding 47 years here of consistent dividend growth every single year. After that, another company I have owned in the past, a gigantic global real estate company, that is McDonald's. If you're looking for a good movie recommendation, check out The Founder to learn the McDonald's story. Very interesting to learn about that, as well as the history of McDonald's and how they really are a real estate company before they're considered to be a restaurant company. McDonald's is a fast food giant with interesting factors that give it stability, such as what I mentioned there, their owning of a lot of the real estate where McDonald's are located. This has allowed them to have 46 years of consistent dividend growth. Next up, we have another healthcare giant, which is Medtronic. MDT is a medical technology company making devices to treat cardiovascular and respiratory diseases as well as other diseases. Being in the tech sector positions them for growth, and they are in the healthcare industry, and with the aging population, there's expected to be more and more demand on healthcare services. They have enjoyed 45 years of dividend growth. Next up, if you've been feeling a bit salty lately or you like having a little bit of spice on your food, we have the McCormick Company trading under MKC. Guys, I know my jokes have gotten worse and worse as this is going along, but you've got to remember what I'm doing here, which is reading off of a PowerPoint. I really don't mind it, guys, but this is what's making sure I keep my sanity. If you've made it this far, guys, please drop me a like and leave me a comment down below, letting me know if there's any dividend stocks on this list that you personally own yourself. So McCormick produces popular American food products like French's, as well as Grill Mates, and of course the McCormick Spice line. So if you are interested here, guys, this company has 36 years of dividend growth. Next up, we have NextEra Energy, trading under the symbol NEE. NEE is the largest utility company in the world, in addition, a leader in clean energy. So if you're looking into, companies that are forward thinking in the utility industry, you're not getting as high of a dividend yield, but I would imagine that's based on costly investments into the future renewable energy. This is a stock I'm going to look into in the future. I'm not very familiar with it, but they do have 27 consecutive years of dividend growth here, making them a newcomer but a dividend aristocrat. After that, we have Nucor Corporation. This company was founded in 1905 and is a leading steel producer in North America. Now, we've seen some crazy price swings on commodities like steel and other related manufacturing products, so do keep in mind how price fluctuations could affect a company like this. However, despite that, they have had 49 years of consistent dividend growth every single year. In addition, it's important to note that steel stocks historically have performed well during high inflation economies, which is one we seem to be in right now. So that may be something to consider as well when looking into different stocks. After that, we have another REIT here, and this is a monthly dividend payer, making this a very popular stock. There are some stocks out there that pay monthly dividends. There's not too many, but this is definitely the most popular. It is the Realty Income Corporation. And the idea here is that this REIT pays you every single month, just like you would earn, your rent check if you owned real estate that you rented out. Now, Realty Income Corp has some excellent long-term tenants, such as Walgreens, Dollar General, 7-Eleven, FedEx, and Regal Cinemas. So these are very long-term leases at many of their properties. This company has enjoyed 27 consecutive years of dividend growth. Next up, we have a company dating back to 1847, the People's United Financial. PBCT is a finance firm whose clients include individuals as well as businesses and government clients. This company, despite the fact that they have been around for over 170 years, they have had 28 consistent years of dividend growth, but obviously at one point in time, they did break that streak. Next up, we have the secondary beverage company to Coca-Cola, and that is none other than PepsiCo. PepsiCo is the second largest soda brand and snack producer in the world, and they have had 5 decades, 50 years of running dividend growth. Personally, I've never owned this stock myself. I'm more of a Coca-Cola person, not so much in terms of what I drink, but in terms of the stocks that I like. And I've never really seen any reason to own both Coca-Cola and Pepsi. So, if I did want to have exposure to that in my portfolio, I would most likely lean towards the side of Coca-Cola. But that is a largely uneducated opinion because I haven't really looked into PepsiCo. I would say it's worth looking into both if you're considering either as an investment. Then we have another company I have definitely owned in the past, and I use many of their products. That is Procter Gamble. So P&G is a manufacturer of essential goods like toiletries, hygiene products, as well as other household-related products. Now, this company here has had 65 consistent years of dividend growth, putting them at one of the very top spots here on our list. In addition, a pretty wild statistic here, Procter & Gamble has paid dividends every single year since the year 1890. After that, we have a company known as Pentair. Pentair sells water filtration, management, and pool products to shoppers and businesses, and this business setup has allowed them to have 46 consecutive years of dividend growth. I know a lot of people are doing, pools and remodeling their backyards and their newly purchased homes, so maybe there's going to be a lot more demand on pool products, which could benefit this company, something that might be worth looking into. Next up here, guys, we have PPG Industries. This company makes paints and sealants mostly for industrial applications, including construction, military, infrastructure, and more. So this company here has had 50 years of consistent dividend payouts, which is pretty impressive, putting them towards the top of our list. Now, after that, we have Roper Technologies. Technologies. I'll be honest, guys, I've never heard of this company before, but I'm definitely going to look into it more because I like the type of business that they are here, which is SaaS, or software as a service. So Roper Tech owns several software program subscriptions, which can provide very consistent revenue. I would imagine that, as well as good management and a number of other things, is what has led them to 29 consistent years of dividend growth, making them a newer addition here to this list of Dividend Aristocrats. After that, we have a very well-known paint company, Sherwin-Williams. Sherwin-Williams is the biggest paint retailer in the United States. So that is pretty impressive to be able to say that. This has given them a very well-known brand and has led them to 43 consecutive years of dividend payouts and dividend increases. After that, not to be confused with the S&P 500, we have the S&P Global. S&P Global provides analytics, research, and credit ratings for stock markets, including the S&P 500. So that's probably where that name comes from. Can't say I know very much about this company, but they have enjoyed 49 running years of dividend growth. After that, we have Stanley Black & Decker. This company provides equipment for construction and landscaping to both businesses and consumers. Black & Decker, for me, guys, is a tool brand I don't touch, so this would be a stock I would not touch. However, there's clearly people out there buying these tools and equipment because they have had 54 consecutive years of dividend growth. If I'm buying tools, I'm more of a DeWalt person, or maybe I might get into Milwaukee, but they tend to be a bit more expensive. Black & Decker, just never been impressed with their tools, I will say that. So moving on here, guys, after that, we have Sysco Corporation, and this company is the largest American food distributor who supplies to restaurants and other organizations. I would imagine this stock took a beating during the business closures that particularly hit restaurants and bars the most. However, since then, things have rebounded, and this company has had 53 consecutive years of dividend growth, so it's definitely one that I'll be putting on my watch list in the future. After that, we have Target, and it's always impressed me that this company has had 51 running years of dividend growth because of all of the disruption we've seen in retail over the last 20 to 30 years. Through everything, through the pandemic, through the closure of, a lot of businesses and brick and mortar, they have been able to stay very relevant and keep growing that dividend. This is a dominant American retailer, and they still are very much that today. Target has continued to adapt over the years, allowing them to stay relevant and dominate their industry here. One example of that was the omnichannel digital shopping experience, which was their answer or reaction to the pandemic, shutting down a lot of traditional in-person shopping. So next up on the list here is T. Rowe Price Group, and this is another asset management firm with actively managed investment products. So for example, that would be something like mutual funds, which you'll also find from Franklin Templeton, another dividend aristocrat we have already covered here. And T. Rowe Price has actually over 1.5 trillion in assets under management. Now they have an impressive yield at this point in time, and they have 35 consecutive years of dividend growth. After that, we have VF Co. VF Corporation is a clothing company that sells brands like North Face, Supreme, Dickies, and Timberland. I'll be honest, I've never heard of this one before, so thank you, Drew, for this list. This has exposed me as well to a lot of companies that I have never heard of, but I'll tell you what, I do like North Face as well as Timberland. Those are decent clothing companies. Supreme, absolutely not. I think it's very stupid, but I understand, the hype culture, so I guess there's some people who see value there. But yeah, Dickies as well. That's big in upstate New York with, construction wear. So, I'm not sure if it's something I would own myself, but I would definitely look into it more. VF Corporation has had an impressive 48 years of dividend growth, so definitely nothing to shake a stick at or a coat hanger. After that, we have another company that I have owned in the past, that is Walgreens Boots Alliance, trading under the symbol WBA. This is an international group of pharmacy chains. So you have Walgreens here in the US, and Boots is a big store, I believe, over in the UK. And then Alliance is actually a unrelated healthcare company that merged. So all of these companies at one point were separate, but it came together to this Walgreens, Boots, Alliance, all together. So there's a little trivial knowledge, or if you're interested, that tells you a bit more about the company. So this is a very solid dividend stock, as well as a retailer that has done quite well, and they were a decent pandemic play, being an essential business allowed to stay open, and they were also a location where people were getting vaccinated, which increased foot traffic into their stores. So Walgreens Boots Alliance has had 46 consecutive years of dividend growth, putting them towards the middle of the pack here. Next up, we have Walmart, trading under the symbol WMT. Walmart is the retail giant of the United States with, get this here guys, over 10,000 stores. Now they're also becoming a global retail giant as well, with over 5,900 international stores. Now the yield isn't necessarily that high, but they do know what they're doing to keep things consistent, because they have had 48 years of dividend growth every single year. In addition, Walmart is very much competing against Amazon, and they're doing a damn good job of it. So they are beginning to mimic a Amazon-like company, which could expand their online retail storefront and make them more of a interesting, technology type company, not just a traditional old school retail play, more and more of an e-commerce play. After that, guys, we have West Pharmaceutical Services. This is a leading producer of medical equipment for injectable medicines. And so I would imagine this company has done quite well with the vaccine rollout. I'm sure a lot of their products were used in that process. And they have had 29 consecutive years here of dividend growth. Okay, guys, so that is going to wrap up this mega list here of Dividend Aristocrats. I hope you enjoyed it. If you don't mind, go ahead and check out that article down below and bookmark it for future reference if you want to learn more about dividend stocks, or maybe you want to reference that resource in the future. Thanks again here to Drew for putting all of this research together. And if you guys want to give back to me, feel free to check out my M1 Finance affiliate link down below. This is a fantastic platform for dividend investing. It offers commission-free trading, automatic portfolio level dividend reinvestment, automatic rebalancing, all sorts of great features for dividend investing specifically. So be sure to check that out down in the description below. But thank you guys so much for tuning in. If you made it to the very end, make sure you subscribe and hit that bell for future notifications. And as always, I hope to see you in the next video.